Granny flats offer the opportunity to start investing without breaking the bank. But one of the biggest benefits is that they offer significant depreciation savings. After building her granny flat for $130,000 and claiming depreciation, Charlotte's yearly profit was increased to over $7,000. Hey everyone, Kim Quach from Geotax, here for another video designed to help you become a better property investor. Adding a granny flat to your existing property increases the amount of depreciation you can claim. This is because newly built properties offer investors the opportunity to claim deductions for the depreciation on the property's plant and equipment and the property's capital works deductions. The date, age, and type of property all have an impact on what you can or can't claim on depreciation. And so in today's video, I want to show you just how much you can save in tax on your brand new granny flat. Stick around to find out how easy it can be. Before we get started, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Let's get started. Charlotte decided to build a granny flat on her property about a year ago and was able to immediately rent it out for $370 per week. So she was generating about $19,400 each year, and it was costing her $12,323 to maintain the property and cover the costs of her interest repayments. Now, she was already in a positive cash flow position, but after speaking to a quantity surveyor, she realized that there was an opportunity to possibly make even more income from her investment property. To help her decide whether to order a depreciation schedule or not, we weighed up her options, with and without a depreciation claim. Without a depreciation claim, Charlotte would generate $6,917. She would pay $2,559 worth of tax and would not be eligible for any tax refund. So her annual income was about $4,358. But according to the depreciation report we put together for her, she could claim $7,300 in depreciation in her first year, meaning she will be eligible for a $142 tax refund. Essentially, this will mean that she can earn $7,509 each year from her investment property. That's a $2,701 difference compared to if she wasn't claiming depreciation. Without depreciation, Charlotte could only generate $84 of profit per week from her newly built granny flat. However, by taking advantage of the ATO's tax breaks and making a depreciation claim, she can generate $136 of profit each week. And the best part, she can continue claiming depreciation each year for up to 40 years, as long as she continues to own the granny flat, because that's how long her depreciation schedule is valid for. It's pretty simple to get your hands on a depreciation schedule. Within 5 to 10 days of contacting us, you can start saving. But if you'd like to first calculate whether or not the savings are worth the cost of a depreciation schedule, we have a depreciation calculator you can use. It's an accounting tool designed to help estimate and calculate the declining value of capital works and plant and equipment assets, and relies on accurate figures to present accurate estimations. And it's completely free. I've left the link in the description box below. Otherwise, if you'd like to know if your property qualifies for a depreciation claim, let us know in the comments below and we can get the ball rolling on your depreciation schedule. That's it from me. If you know a friend, colleague, or family member who needs to hear this, please make sure you share this video with them. I'm Kim Quach from Geotax. See you next time.